Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Boyajian, currency analyst, and today's Tuesday, July the 4th, 2017. Today we will look at the dollar-yen, the euro-dollar, and the pound-dollar pairs. So let's begin with the dollar-yen pair. Dollar-yen has been looking much more bullish in recent days, especially after yesterday's sharp gains, where we saw the pair hitting a 7-week high of 113.46. The near-term bias is rather strong. Its RSI is currently just under the 70 level. 70, of course, represents overbought territory. Looking at the 4-hour chart, we can see it's looking pretty much similar to the daily chart with RSI just below 70. Immediate resistance, should we see further upside movements, should come from yesterday's high of 113.46, while on the downside, immediate support should come from the Kijun Sen line at 112.60. Further up, we do have the previous support and resistance level of 113.70, and above that we have, of course, the May peak of 114.36, and that is important because if we look at the longer term view, although we still have an upward trending 200-day moving average, the dollar-yen has been making lower highs and lower lows since December. Of course, we did actually have a higher low back in earlier a few weeks ago, but it is important for the pair to break above the 114.36 level if it is to maintain the positive outlook in the medium term, which is very close to actually becoming neutral. Moving to the Euro-USD now. Euro-USD is also looking more bullish. It did hit a more than 1-year high, 1.1445 last week. It has been drifting lower since that peak though, but the MACD is still looking rather bullish, and in the stochastics chart we can see that the percentage K line has just dropped below overbought territory. If you look at in the 4-hour chart for comparison, things are looking a little bit more neutral. MACD, we can see the histogram is close to becoming zero, and the stochastics, it has actually leveled off. It was trending up, the percentage K line. It's slightly dipped back below again, so it does show that the pair is struggling for momentum at the moment. Looking in the 4-hour chart, the immediate resistance should come from the 1.14 handle, with immediate support coming at the 1.1330 level, which at the moment is not too far from that area. Moving back to the daily chart, of course, the 1.1445 level hit last week. That is the main resistance level to look out for, and beyond that we should see the pair targeting the previous highs we did have in May 2016, a high of 1.1616, and in August 2015 the high of 1.1713. So if the Euro-USD does manage to break above 1.1445, those two previous peaks should come in focus, and on the downside we should see support coming from 1.1280, which is 1.1280 is also the Kijun Sen line, and the 1.1150 level, which has been an important support area in the past, as it's also just above the 50-day moving average. In the longer term, we are seeing a positive outlook given the bullish crossover we saw back in May. And we still have the 50-day moving average sharply trending upwards, and even the 200-day moving average is just about now starting to edge up. And finally, let's look at cable. Pound dollar has been making similar moves to the euro in recent days. We saw that peak of 1.3029 last week, and at the moment The near-term bias is pretty much neutral. If you look at the 4-hour chart, RSI is actually dropped just below the 50 level. And we can see also that prices are actually confined within the Tenkan Sen and Kijun Sen lines of the Ichimoku cloud. At the top, we've got the 1.2970 level as the nearest resistance, and 1.2910 level just below today's intraday low, and that's also the Kijun Sen line there. If we do see the pair gaining further upside momentum, of course we've got the May pick of 1.3047 coming as the next major resistance level, followed by the 1.31 handle. And to the downside, we've got the 50-day moving average at 1.2870, followed by another historical support resistance area of 1.2775. In the medium term, though, the pair is pretty much positive, although given the fact that prices have been consolidating since that May high, we are seeing a weakening of the bullish outlook, but it's true. But for the moment, although it has been looking more neutral since, it's just about managing to remain positive. That's it from me. Thank you very much for watching, and have a great day.